Got it now? Okay. Cost of sales, there would definitely be for food and for beverages because you got to figure out the cost of what you sold. We're going to deal with labor costs. The key with this one, when you have payroll, not only do you pay the gross wages, you have to pay some expenses associated with payroll. For example, the employer has to match an employee's Social Security and Medicare. So if you take out $60 for someone's Social Security, you're also putting in $60 for that Social Security. You have to pay disability. You have to pay federal and state unemployment. You have to pay workman's comp insurance. Okay, and those are just the standards. Anything else on top of that is up to the company, such as retirement plans, health insurance, cafeteria plans. I mean, they can go on and on forever. But the key is the number that goes there has to include the gross wages plus any benefits. And that holds true for any payroll that you have. Other expenses are going to be given to you with what we're going to do. The profit, net revenues, minus the next three columns, because they're all expenses. Cost of sales, labor, other expenses. And that's how you get the profit or loss. When we're doing these, we're going to be doing that for each department. In the real world, you're going to get that information from someplace else. That's what that schedule is. So the first one that's there is the rooms, and it says Schedule 1. Look over on page 145. That's Schedule 1. So each area would be doing their own individual income statement. That's the income statement for rooms. The summary sheet would take the information off of the individual schedules. So if you look at that and you look at the net revenues for rooms, the $6,070,356, do you see where that's over on the summary sheet? How it's taken over onto the summary sheet. Okay, if you don't see that, let me know. Okay, payroll, labor expenses. Look on page 145. See where it's carried over on 144. Other expenses, same thing. It's carried over. And then the profit is also there. So if you turn to 146, that's your food and beverage. Goes on to 147. Miscellaneous is on 147. 148 is expenses, other sections, and it just keeps going. So this income statement is not one page long. It's 1, 2, 3, 4, 5, 6, 7, 8, 9 pages long. And if you keep looking through, you'll see other departments that could be there. So there's a health spa, there's a golf course and pro shop, parking, other departments, and et cetera, et cetera, et cetera. Okay. So when we're doing the income statement, we're not going to have those schedules. So we're going to have to figure out these numbers based on the information they give us. And that's what we're going to be working on. Okay. First section, operated departments. That is the format. So if you can use Excel, that is your friend. Anything with revenues is going to go there. Questions? Okay, the middle section. These are undistributed operating expenses. You will use the same 5 areas every single time. Okay? They don't change. They go in that order and they're there every single time. There should not be anything in the revenue column, because if it had revenues, it'd be up above. And none of those departments are going to have revenues. First one is always administrative and general. Typically, you're only going to have payroll and other expenses. That payroll also has to include the benefits. Any payroll has to include the benefits. I'm going to say that 16 times, and somebody's going to forget to do that. All right, so just make sure. Other expenses, in our case, will be given to us. This middle section is expenses only. So that's why those numbers are added up to get the total in the right-hand column. They are expenses only. So that first one, these numbers are small. I have a hard time reading them. First one for administrative and general, you would take the 269,914 plus 217,851, and that's what you get, the 487,765. You're just adding up the expenses. Information and telecommunication supplies or systems, does have a cost of sales. All right, because there is a cost to furnishing the computer systems, the Wi-Fi, et cetera, et cetera. But again, those 3 numbers are now added up to get to the 249,143. Sales and marketing. You can have wages if you have a franchise fee, and some of the problems will have a franchise fee. It is included in sales and marketing, so you may want to make a note of that. Okay, franchise fees go with sales and marketing. Property operation and maintenance. Lots of times this is just going to be a contract. A lot of companies will hire an outside firm to do that, and they don't have to worry about payroll. But if there's payroll, you put it in. And again, you're adding those 2 numbers to get your total. Utilities will be things like heat, lights, water. Very obvious what they should be. And again, you're going to add them all up and put the subtotal there. You're not going to have any wages for utilities. So that middle section, the total undistributed operating expenses, you're just adding up the numbers in the cost of sales, labor, other expense columns, and we also added it up for the profit and loss. You're now going to combine your first 2 sections. And so if you get down to that totals line, that is the first 2 sections added together. Again, there was no more revenues, and there shouldn't be any more revenues. Cost of sales is those 2 subtotals. Labor is the 2 subtotals. Other expenses is the 2 subtotals. But you'll notice there's nothing in the right-hand column. Questions on the middle section? Okay. So gross operating profit or operating profit after undistributed expenses. You're going to see it written both ways. You would now take the total from part one, which was the 5,300,000, blah, blah, blah. Subtract the additional expenses from the undistributed operating expenses, the 1,768,000, etc. That's your gross operating profit. Okay, first section minus the second section. That's the gross operating profit. The reason that we separate out things like we do also is because the first two sections, management can have some control over those expenses and those revenues. Everything after those first two sections, there's not really any control over. You don't determine what your taxes are. You don't determine what your depreciation is. It's figured out based on a schedule, et cetera, et cetera. Okay. Now, for some reason, they missed a line here. Okay. So I want you to write it in because, again, all about the format. After gross operating profit, write in management fee. And this is why at this point, we calculate the management fee because it's based on the gross operating profit and something from up above. And this is one of those ones you just do what they tell you to do. It's definitely going to be a percentage of the gross operating profit, and then it's a percentage of something else. Sometimes it's room revenue, sometimes it's total revenue. You just, again, it's going to change in our case from problem to problem. You're just going to do what they tell you to do. Okay, then you're going to take another subtotal, and that management fee is going to be subtracted off your gross operating profit. Okay, and so you need to add another little line in there after that. And income before non-operating income and expenses. It's a mouthful. Okay, this next part, I'm going to give you choices as to how you set it up. The non-operating expenses, the ones that I'm going to show you, I put it all on one line and I just call it rent, property tax, and insurance, and just subtotal it because it would have its own schedule. If you want to do it this way, the only things that are covered under these non-operating expenses are property taxes, insurance, and rent. And I say, I just do it on one line. If you want to do it separately like this and take a subtotal, that's fine. I don't care either way. The other thing that I want you to write in there is after total non-operating expenses, put a little line in there that says other income and expenses. Some of the problems that we're going to do are going to have the company selling a piece of excess equipment. And so we have to record a gain or loss, and that's where it's going to go. Some of this will make more sense when we actually do one. But that's one you may have, you may not. This one doesn't, but I want you to stick it in there so that you know. So before the EBITDA, you would put other income / expenses. Okay, EBITDA, earnings before interest, taxes, depreciation, amortization. Okay? Earnings before interest, taxes, depreciation, amortization. Your next line is your depreciation and amortization, and your interest expense is on its own line. And then you're going to have income before taxes, because those numbers again would be subtracted off. You're going to calculate your taxes based on what that smallest number you found. Subtract that off to get your net income. Okay, a lot of stuff. I know. So what we're going to do is we're going to start to work on one. So I want to work on number 15. So if you go to page 133, now I'm going to just warn you, be careful, because these problems will go over 2 pages and you'll flip and now you're in the wrong problem. So just be careful. So with this one, number 15 on the bottom of 133, it gives you a list of some of the accounts which continue onto the top of 134. And then we have our additional information on 134. You can see there's some question marks that we have to fill in. The other thing that I would suggest is that you kind of check off the information as you go, because you're only going to use the numbers once. That way you won't forget something. Okay, so we're going to start with the additional information. And I'm going to go to an Excel sheet. Thought I had one here. Here we go. I'm going to do this instead of the whiteboard. It'll be easier. Okay. I'm going to start going through the additional information. If you don't understand what I'm doing, or you need me to go through it again, you have to ask, okay? Because otherwise, as I've told you, I just keep going. All right, the first one talks about they borrowed $1 million on April 1st, X2. Again, make sure we know what we are doing it for. We're doing this income statement for X2. So we borrowed $1 million at 10% on April 1st, X2. So for this one, we have to calculate the interest expense. Because we borrowed it, so we borrowed $1 million. Our interest rate was 10%. Ugh. Okay, now, how much time would we be using for this one? What would be your time factor? You
9
borrowed
months.
it. What's up?
9 months since it was April 1st for the current year you're working on.
Correct. Okay. So if the date is the first of the month, you include it. If the date is the end of the month, you do not. So our time factor is going to be 9 months. All right. Any questions on that? So we're going to calculate simple interest. And simple interest is I think we did this already. I equals PRT.
I'm sorry, did you say question 16 or question 15?
We are in question 15. We're doing the additional information on 15, so it's above 16 there.
Okay.
Okay, so to figure this out, what we would do, we would take the $1 million and we would multiply by 0.10, and then we would multiply by 9/12. Is everybody okay with that? I'm going to copy it down here. And if I put an equal sign in front of it, it will actually calculate it for me. Okay. So that's the $1 million times 10% times 9/12. And I would suggest that you label this, because sometimes you have revenue, that this is interest expense. All right, questions? Okay, we'll go to the next one. So the next one is to figure out cost of goods sold. And so there's a little formula that you're always going to use. You start with the beginning inventory. Can never type that right. You add purchases. Okay. You subtract ending inventory. And that will give you cost of food, goods used. Okay. So that's the cost of goods used. But we need the cost specifically to the goods that are sold. Sometimes this is the cost of goods sold. But with the problems that we're going to be doing, it's not. So what you have to do is you have to subtract off transfers to other departments. So think about this. If we're doing this for bar and bev, it would make sense that we would order our peanuts and our popcorn and our limes and our lemons and things like that. We would order those with the restaurant, because it would certainly be cheaper to do it as bulk. So if this is the food category, we would subtract off transfers that we transferred to the beverage, to the bar. The other thing, you're not going to see that very much, if at all. The other thing you're going to have to do, which you will see, is we also have to subtract off employee meals. So if we furnish meals to our employees, that also has to be subtracted off because that has nothing to do with what we sold. Say that we're furnishing them, we're not charging them. So that will give us the cost, and it's usually food, but this covers it all. Cost of food sold. And so you're going to have to calculate this in every single one. So if you look at number 2, what is the beginning inventory for food? What does it tell you?
5,000?
Correct.
100,000.
5,000, right? Okay. The purchases number you're going to find in your list. So go back through that whole list of accounts. Those account balances and find the food purchases.
Is it 220,000?
220,000. Good. Yep. Okay. We're going to freeze for a second. Periodically likes to do. Okay. So there's our purchases. What about our ending inventory?
7,000?
Yep. Okay. Okay, so what we're going to do is we're going to add this plus this minus this. And that's going to give us our cost of goods used, or food in this case. Did they tell us about any transfers to other departments? Did we have any? Is there anything listed there in number 2? Come on, 50-50 shot, yes or no? Doesn't say anything about
I
transfer.
don't see anything as transfers.
Right, so this is a 0. And I say for most of what you're gonna do, it's 0. I don't know if it's there on any of the big problems that we do. Okay, but look at number 2. We do have employee meals. How much are our employee meals?
3,000 total.
Okay. And so to get our cost of goods sold, we're going to take this and we're going to minus this. And so that's our cost of food sold. In this case, it is food. So I'll put that in there so it's a little less confusing. Okay, we're just going to keep freezing today.
Now, there is something about food allowances. That won't impact these costs?
No, what your
These-
food allowances are. So what that does is that gives the company some cushion. So like if people return their meals, things like that. So that's going to affect our net revenue.
Okay.
So we'll deal with that in a little bit. Okay. So the next stuff is payroll. Oh, why are you doing this today? Hold on, I just got to go out and come back in. Don't know why it's doing it. Now I can go fix. Okay, so my suggestion is we put down any department that has wages. So go look in your list. Obviously, we're gonna have rooms and food, right? What other department has payroll?
There's A&G salaries here.
Okay. Is there anything else? I don't see anything else. Okay, so let's put those numbers in. What are the salaries for rooms? Just take it off the list. What is it?
Rooms is 350,000.
And food?
200,000.
And A&G.
Is 100,000.
Okay. So the next thing you're going to do is figure out in number 3, they tell us the benefits are 30%.
So we have to multiply each of those by
Yes.
1.3.
No, I would do it by the
Or-
0.3 because
Okay.
I'll show you why in a second.
Oh, because you have to do it as a separate column.
Yes.
Gotcha.
Okay, so we're going to take the rooms and we would multiply by 0.3. Okay. And we would do the same thing here and the same thing here. So I'm just going to take so I'm going to say I'm going to take this and I'm going to multiply by 0.3. If I do that, if you use Excel at all, then you can copy the formula. Okay. That you're going to do for every single problem. The key that you have to watch for is that free food. Sometimes it's included in this 30%. In this example, it's included in the 30%. So I'm just putting this down here so that you know we don't have to add on these meals. This does not change. What changes is what can happen down here. So the food is included in this one. We do not add anything more. if it tells you that the food is excluded, then we would have to add 2,000 to the food department and 1,000 to A&G, because that's who got the meals. So you have to watch for included, excluded. Included means we're done. Excluded means you put in the food here. And we'll be doing the problems both ways. So total payroll would be these things added up. Oops. When you go do the income statement, make sure you take these numbers and not the numbers in the list. Questions? Okay, let's go to the next one. Number 4 says they pay 25% on income tax. Well, we can't do that one yet. We can't do that one until we're almost all done with the income statement. Number 5 talks about the management fee. Here again, we can't do that one until we do the first 2 sections of the income statement, because it is based on total revenue and it's based on the income after undistributed operating expenses. And that's what I mean. Remember, I said sometimes it's gross profit, sometimes it's undistributed operating expenses. So we can't do that yet either. We can do number 6. We had an investment that cost $10,000 and it was sold for 15. So if we bought it for 10 and sold it for 15, what do we have? Did you make money? Did you
Gain
lose
of
money?
5.
You got a gain of 5, right? That's going to have to go on the income statement. That's going to be that other income I told you about. Number 7, we have a van that cost $2,000. It was sold. Oh, it's 25,000. Sold for 2. Well, our time is almost up. And okay. And it had a book value of $5. So when you have something with depreciation, to figure out gains and losses, you're going to compare the book value to what it was sold. So the book value is after depreciation. So if we have a book value of 5, sold for 2, what do we have?
3.
3, and what is the 3, a gain or a loss?
Loss.
A loss.
Right. Okay, we got one more. We have a certificate of
And
deposit.
would that be recorded in that other income
Yes.
area?
Yep,
Okay.
they're both gonna go in there. So we have a 1-year CD for 100,000 at 6%. And it was September what?
The 1st, so the whole month.
Correct. So this one is gonna be interest revenue. And we're gonna calculate it exactly the same way that we did the expense. So how many months this time?
4.
Good. So if I copy that down. That's our interest. Okay, so that's what you have to do first each time. Okay, that's what you have to do first each time. Any questions? Okay, that was a lot. I know. So I'm gonna give you a couple little problems to do. So 4 and 5, they're working with the cost of food sold. So do those for Friday, and then we're gonna finish this other one on Friday.
4
Question,
and 5 on what page?
125, 126.
Okay.
Okay. All right, so I'm gonna stop recording.